Welcome to the Commercial Real Estate Investing from A to Z podcast. I'm your host, Steph Boldrini. We provide straightforward information by bringing excellent guests with real-world experience in all topics related to commercial real estate investing. And in today's episode, I'm going to be covering what is happening with commercial property prices in this market, given the latest interest rate hikes, and what are some of the lessons learned over the last few weeks since I caught up with you guys. Here we go. So remember 2.5 years ago when COVID started and we were all predicting a steep decline in all asset classes? And remember what happened? Not only did real estate prices kept increasing and selling at all-time high prices, but the stock market was growing exponentially, even though the entire planet was closed, at least for a couple of months in some areas. I do not know one person who could have predicted that. So I think that now finally our time has arrived to purchase commercial properties. The prices for commercial real estate are going down. I am getting at least one email per day that says price reduction. And I have not seen these price reduction emails since I started investing and up until the last couple of months. So this is just the beginning and it is extremely exciting. Also, today I got a call from a broker that just 2 weeks ago said that the pricing guidance for a particular property was 10.5 million, and 2 weeks later today is 8.5. And because our assistant sometimes reaches out to the broker directly to get the OM from them, they gave her the pricing guidance of 7 million. So not only did we hear two different prices, but we also just got a 30% discount in 2 weeks. It is finally here, and it is my prediction that prices will continue to drop well into next year. And it's worth reminding all of you of my calculations that I shared a few weeks ago, where when the cap rates increase just 1% on a $6 million deal that was selling in 2021 at a 5% cap, and today that same exact deal, same exact NOI is at least 6%, and you just got a $1 million discount. At a 2% cap rate increase, you got a $1.7 million discount. And I predict a very bare minimum of a 2% cap rate increase on average, depending on the asset class for this year. And of course, like I said before, let's not forget that your mortgage payment is about $30,000 more per year. But when the rates go down again within definitely the next 5 years, at the latest, you will be able to refinance and sell it at a 5% cap again. So you just paid $150,000 in mortgage payments, higher payments for the next 5 years total, and you got at least a $1.7 million discount. Then you can refinance when the rates go down again, and you're gonna get a double win because cap rates are going to go down at that time again, so you're getting both sides of the table, which is fantastic. And also, let's not forget that the interest part of this mortgage is tax deductible. It's a fantastic time to buy, and it'll be even better as the rates keep going up. Now let's move on to lessons learned. Over the last several weeks, I have learned a couple of lessons that I think is very important that you should learn so you don't have to learn on your own. One of them is a lesson from a friend of mine that I believe is very likely a billionaire real estate investor. And besides the fact that he is an awesome, caring, giving human being, He was sharing with me the other day about one of his huge deals. I don't recall what the issue was with that particular deal, but he had to work with a legal team, and he told me that he met with the entire legal team every Saturday morning to get an update. He said that we always need to be on top of everything and demand regular updates from everyone. Otherwise, they'll let it slide. Just let that sink in for a bit, because he is already working with a top law firm that money can afford. And he is telling me that he is the one scheduling weekly in-person meetings with the legal team to get updates and demand progress on the project. On another note, this same person also got to where he is today by working incredibly hard for a few decades. Another lesson, I'm part of a mastermind call where George Ross, he was Trump's attorney, and he is the person that was next to Trump on that TV show, The Apprentice. He has a monthly mastermind call with Victor Menashe that I will be happy to post the link under show notes, that we can ask whatever question, whether it's legal or not, to him, and he will guide us through the process. And my question on this mastermind was, what should I do to get bigger deals, not only from a mindset perspective, but also a team's perspective, etc. And he said his answer was, it's as easy as adding a zero to the purchase price. So that is the exact same process for every single deal. And with regards to the team, he said that I could either join a team that has been doing this kind of thing for a while and learn from them, or I can build one myself, which is what I have been doing lately. So either partner up with people and then go on your own for these larger 10, 15, $20 million deals, or grow organically on your own with getting top people to work with you. Another lesson that I already know, thankfully, but I want to remind all of you to pass everything by your lawyer, even standard sales agreements. We recently got in contract with a particular property, and they sent us a standard sales agreement where they had changed a couple of things on the agreement that we would not have noticed. And there were a couple of different non-standard items that they unchecked that they should provide us. So our attorney caught all of these things, and we ended up coming to an agreement on some of them. But it is extremely important that you pass all of these things by your attorney. It can save you tens of thousands of dollars, if not more. Regarding my follow-up tip that I always tell people to do, I just want to update you that my spreadsheet with now 715 people that I have met in the industry is finally paying off. So now that I am fundraising for our first syndication and reaching out to people to see if they know somebody that would like to invest in these deals, I have learned that especially in this first syndication, we all must create an email from scratch for each person. For example, I will say something like, "Hi, John, we met at XYZ place or event, and you asked me to let you know whenever we have a deal in contract, and we now have a few properties in contract at 14% returns to our investors. Do you happen to know anyone who may be interested?" So I basically put whatever happened, because I took notes when we met, I put in that email, and the response rate has been excellent. I hope this was useful to you guys. I know this was a shorter episode, but I am super excited for these prices that are going down, because another thing that I didn't mention in the beginning of this episode was that your down payment is going to be significantly less. So now you have an extra $600,000 that you do not have to put as a down payment. And you can take that 600K, invest in anything that pays you 10% a year, and pay the $30,000 increase on your mortgage, and you still have 30K left at the end of the day. So it's an incredible time to invest, guys, and it's going to get even better. So start looking out for deals, start having this conversation with the brokers. Once the sellers start to realize that nobody's buying at the low cap rates of earlier this year, they are going to be decreasing the prices because you simply cannot get a loan, and common sense is going to start happening, and I already see it. I hope this was helpful for everybody. If you haven't already, make sure to subscribe to our newsletter at montecarlorei.com. On top of the page, we are starting to send out the syndication information to our subscribers, and I will see you next time.